Oh, hi traders. Right, I thought I'd do a quick video update on the VIP watch list. Okay, so we have market cycle coming down to the bottom manipulation point here. Cycle ended. You can kind of see the price action change here. We've got a new higher low, high, etc. Once you break out this accumulation, so you can even mark the accumulation like that, or however you want really. I mean, the most important thing is that the structure broke here, and then we got market cycle push 1, market cycle push 2, and then market cycle push 3. We've actually created a new high on the higher time frame. Get rid of this EM8. That's a 21 EM8. Sometimes it's helpful, sometimes it's not. So we'll turn it off for a minute anyway. So today's price action here. We've had the end of the cycle. We've just retraced here, which is kind of like a distribution of whatever orders were collected up this direction here. And you'll notice also that we've actually broken the trend line here. Now you see this area here. Okay, some people will call that compression before a drop or retracement or whatever. This is actually called the barroom brawl, where it's basically either side of a trend line. No decision can be made. There's buyers who are trying to buy the fake out, and there's sellers trying to sell the breakout. So it's not anything that you ever want to get really involved with. If you draw another trend line, okay, just like that, then what you'll normally see is that we've had, a trend line break, a retracement, and then a breakout to the bottom. So by the looks of it, it looks as though we're going to move bearish tomorrow, maybe have a 2 or 3 stage cycle coming down. However, if you move up the time frames again, okay, we've got a new trend line set here, okay, which would officially be 0.68 and 0.7, so 70% retracement area. So if price was to break this low here, it may come down slow. It may not be an official cycle as such. However, I won't be looking to go long on GJ anytime soon. I'll be either looking for, because we haven't officially started a new cycle yet. Okay, a new cycle only begins when we hit a full ADR, and we haven't hit a full ADR bearish. Okay, so we have to trade this pair either by not trading it at all. We need a confirmation of which direction it's going to go. At the minute it has no direction, so you could either make or turn that into your accumulation if you like, and wait for a full ADR move to be made. Now if the full ADR move is made later on today, or if we've got another 3 or 4 hours left of the market, if we were to hit full ADR today, we can officially then say, well, we start to look for the first push or the second push of the cycle, because this could be nothing more than a retracement. By trading this way, you can also have peace of mind that you're kind of getting your bias right, because another option, what could happen is that we could just continue, in this what would have inevitably be a bull flag breakout and do that kind of thing. Okay, so we need confirmation first, right? This for me is untradeable. There's nothing there, but I'll keep you updated if I have a decision made, or if we have a direct sort of if we have a direction that we can trade in. Obviously I'll put the analysis in the watch list room, and we'll look to enter a trade in whatever direction. If you move over to CAD JPY, okay, I quite like this pair. It's kind of new on the watch list, but there's nothing wrong with CAD and there's nothing wrong with JPY in my opinion. Now you could call this there's 2 methods of thought here, okay, because you've got first push, second push, third push. This is officially the first push here, because this is the turnaround point, okay, where we've gone from whatever this mess was here, probably sideways price action. We've gone bearish, retracement, breakout, bearish, bear flag, bear flag. Okay, and you can see each move has been quite impulsive all the way down. We've had like a head and shoulders pattern here on the 1 hour. Price has broken out. We've done a full ADR down and a full ADR up. All right, so I don't like to call that the first push. So I would now officially say second push sideways. Sorry, first push, 1 day sideways, second push. So we should be looking for the third push. However, we've broken the trend line. Okay, and I know we never really trade trend lines, but they are very useful and they work. You know, to give you direction in the market, it does help. We turn this off again. Sorry, we've actually done a full ADR bearish. So we went up on Friday, which was news related as well. We've come straight back down. Okay, so from here, I'm not going to call this a first push because it's only 78 pips. However, if you look at Euro JPY, that has done a full move bearish. The Swiss franc is going sideways. New Zealand JPY is not on there. Let me just have a look at New Zealand JPY. Yeah, that's done kind of. There's two schools of thought when it comes to measuring a cycle. Okay, number one is that it does a full ADR over three to 5 days. Okay, the second way of measuring it is, has it done over 3 ADR in succession without hitting a full ADR? Has it hit that number? So call it 75 times 3. 225. Well, it's done 170, so it's not quite done a full market cycle, but then market cycle and ADR numbers, they do change, but I suppose on an average we've got 75. So you maybe not call this a completed cycle. However, if you measured it from the bottom here, we're thereabouts. We're about 85% full ADR. So I think we're going to have to, you know, consider GBP JPY is done, CAD JPY is done, the Swiss franc is moving sideways, and Euro JPY is also done because they've done a full ADR. So what I mean is they've done a full retracement of Friday's move. Okay, so we have to now look either to trade it in the direction of which is going, or wait for the second push before we look to get in the trade. So anyway, have to be mindful of what happens around here. Personally, in order for me to go short on GBP JPY, I would be looking for, let's get rid of these because they're quite messy. I'll be looking for a break of this line here. So I wouldn't want to get involved here. I'd want to wait for price to break, come back up and retest, and then maybe take it down to this retracement level, but get out here. So we have maybe room for, let's say, I don't know, so we're getting around about here, underneath these wicks. 40, worst case scenario is going to be 30 pips. For if we could get in tighter, 20 pips. We've got, you know, 6R, 5R, 4R, but we've certainly got 3.5R to get down to this sort of level, 50%, 61.8%. So yeah, I'll keep you updated on that. CAD JPY, obviously we're reaccumulating here. I would suggest whichever way we break out of this area, potentially is the way that the market is going to go from here. If you look higher time frame on both pairs, we are actually in quite a large ranging market. We're not really going anywhere. We're not bullish. We're not bearish. You could say potentially we are more bearish than bullish, but this could also potentially be, you know, a higher time frame bull flag where we maybe come down here, support through the middle, and then we could break up to the upside and skyrocket to God knows where. Similar on GBP JPY, this is 100% bullish. So I would be quite careful about taking shorts and holding them long term. You can see already that, you know, this 4 hour candle is starting to reject this zone. So potentially, you know, if we're looking at, you know, price action and structure, this is what currently we're looking at. Oops. This is what the current price action we're looking at here. Okay, is the zigzag sort of accumulation, reaccumulation. So I would move this manipulation point up to here and say, right, we go long over here, or maybe short from here, potentially, if we get not much movement overnight, you know, maybe something like that, and then a triangle pattern. We wait and see what happens with GJ. To be honest, I'm not massively interested in it. USD CAD, I would like to go through this, okay, because this morning woke up, we were looking at something like that, okay, and I wasn't massively interested in it until price started to come back up. We had this sort of breaker structure, and let's go to the 15-minute time frame, because on the 15-minute time frame we did actually come right the way up here, and so that's your kind of, where is it, this one, that's your first confirmation, okay, so that's the 15-minute manipulation point, sort of liquidity grab, and then the second one here, that was the 30-minute, so we got a kind of double confirmation to go bearish. On the 30-minute we've obviously got a big bearish engulfing, so we've covered these 3 wicks basically. So I entered on the pullback on the next candle, and I assumed the price would just, because this level here doesn't look like much at the minute. When you allow the price action to play out, it didn't want to break. So we kind of got a different sort of look in the structure now. I'm still bearish on it. I think we need a good strong close underneath here, and then maybe a pullback before you see the triangle pattern again. Right, this support is holding strong, but as this price action gets tighter and tighter and tighter, it's going to have nowhere to go. Okay, it's not going to keep getting tighter and then stop. So we need to wait and see, potentially is it going to push back up like we had on the Euro New Zealand dollar. Okay, so it's very similar sort of price action. All right, what tends to happen is they can't break out. All right, just can't break, so it sort of rockets back up to collect more liquidity above here. So it's collected a day, 2 days worth of liquidity from orders going short, and then as soon as it's got that liquidity, it just plummets. And this is one of the ways that generally you see price action. I mean, this is nothing more than a liquidity grab, in my opinion. Again, if you look at the higher time frame, all right, we've got this level has been broken. This is kind of a nothing level apart from a rejection, and then we've got another rejection down here. Longer term, you know, higher time frame, we've got bullish structure on the weekly and the monthly or whatever, but this is an M formation. So price would normally come down here, maybe pull back a little bit, and then we'll end up down here somewhere, because there's free range to trade into down here. Back to USD CAD anyway. What I was expecting to happen today was I would have liked to, I moved to break even before the New York session, probably about 11 o'clock, something like that. They'll be down here. I moved to break even, okay? What I was expecting from here, you see this candle and this candle, maybe even this one at 1 o'clock, what I was expecting to see happen was for buying, you know, orders to be activated, just for price to pull back enough just to, you know, entice more buying activity, okay, so create more stop losses underneath here. And what I was expecting then was a fast sharp movement down, because we had USD news as well, which was negative on both accounts. There was two different news, and it just didn't happen. It just pulled up, snapped me out at break even round about the news-ish time. But I was expecting price just to, you know, make this little, you know, enticement for people to get long from support, and then for price just to slam down, break this level, and then potentially, you know, take profit at here, or at least take half off, because again, longer term, we've got this area here which needs to be fed, I suppose, if you like, and then people see this as imbalance, but if you're trading and you've got you've got obstacles here, right? So there's two schools of thought about it. Once you get down here, you're gonna expect a reaction, okay? Which for people who trade ICT and SMC, you know, bullshit, people will look at these levels, supply and demand, they say, oh, like, that's an order block, let's go, right, okay. But they're on a 1 minute time frame, taking about 20 pips and getting, what, I don't know, 5 hour, whatever it is they do. Well, if you look at it from a higher perspective, this is clean traffic, okay? There's nothing here for anything to, there's no reason why it would stop. It didn't stop on the way up, so why would it stop on the way down, okay? In order for price to react, it has to have something to react to. And I know that there'll be unspent orders in here and it's unfair distribution of price, but the liquidity doesn't lay until it's underneath. The same here, liquidity will be underneath. So as we go back to this method of thought here, this is, for me, you know, this is collection of orders, right? We're accumulating here. It's a triangle pattern type of accumulation. I like to trade accumulations. When you identify and learn to look at the accumulations and the way they work, this is, you know, either square or whatever. This is just a rectangular shape, I suppose. It's accumulation. So price does nothing, and then when it breaks out, it comes back up, retest, and it goes. Another little spike here, and then it drops. So the longer price accumulates, the further it moves away from it generally. So we've got accumulation here. I'm going to get rid of that. Okay, and get rid of that because today is done. There's no more trading today, obviously. It looks like this sort of fair value gap, if you like, is held. Tomorrow, there's no interest in that fair value gap because it's done and dusted. It's yesterday's news. So potentially what we're going to have to look for on USD CAD tomorrow is either, and we need to be careful because of what I said earlier, something like that. Okay, and then we're going to, I think, you know, we're still looking for phase 2 market cycle, because this is the first push, although it was induced by the news. This is the first push officially. This is a reversal, so you can see we did an ADR up and an ADR down. Okay, so accumulation here. Basically what you can see with the price action is this is accumulation, sideways price action, swept the top, broke the low, come back up to this accumulation, reaccumulated from, you know, 230 onwards through to the end, and to the London opened on Friday. I couldn't get my words out. So London opened on Friday, breakout, retest, boom, gone. So we're looking at something similar here, just in a different shape. That's all it is. Just a different shape. You could put that square if you want. You can put it like that. Whatever it is. All we need is the market now to tell us which way it's going to go. But ultimately, we're in phase 2. Okay, so we're allowed to have 1 day of sideways price action. If we get 2 days of sideways price action, we can move to an open bias. But 1 day of sideways price action before we revert and move away from looking for phase 2. So we're looking for phase 2 on USD CAD tomorrow. Currently not looking for anything on Canadian dollar, Japanese yen, GBP, JPY, nothing at all. Okay, so we've got nothing to look at there. I do have some other pairs that I've been looking at. A lot of it's sideways. We, you know, last week of the month as well, so potentially there's not really much to. Yeah, there's not really much to. Potentially not a lot to trade, but we could potentially be looking at a second phase on Euro JPY, but I need to look into this a little bit deeper. Maybe I'll do it tonight, maybe tomorrow morning when I get up about 6 o'clock, whatever. GBP CAD, crazy man, gold, and then I've got these on my watch list as well, because I'm trying to keep hold of pairs that that tend to trend. So trending pairs are going to be our friend, okay, over the next couple of weeks and moving into next year. So anyway, I think that's enough now. I've spoken for 20 minutes, rabbit on. Hopefully you find some useful information in here. However, regardless of that, I'll see you all in the room tomorrow. Good evening, guys.